All right, guys, welcome back to the MyMarketer Show. My name is Danny Decker. I am the co-founder of MyMarketer.com. I'm also your host for the podcast today, so thanks for being here. And we've got a really great guest here. This is someone I'm really excited to talk to. Cass has been a friend for quite a while. So Cassmer Ward is the founder of Nexagy Inc., which provides fractional CFO, controller, and decision support services that simplify financial complexity, improve cash flow, and build systems that support growth. He's also the author of a book that I personally enjoy a lot, which is called How Much Does It Cost to Make a Donut? So Cass, welcome to the show. Thanks for being here, man.
Danny, thanks a lot for having me. I think I sent you a note years ago. I think your journey is what pushed me to write that book. So you were one of the first people to get a copy. So I appreciate, all the work you did on your book and sharing your experience. So
yeah, man, it's a lot of fun. I still have your book back on that bookshelf somewhere, and again, really did enjoy it. So listen, great to have you here, and you're someone that I think has had a really cool entrepreneurial journey. And I probably only know some of it, but I know you've been a partner in multiple businesses. You've been an adjunct professor, just a lot of really interesting stuff. You're an author. So could you start maybe for the audience that doesn't know who you are yet, just talk a little bit about kind of your background and what led you to where you are today?
Yeah, my background was, I went and got a degree in accounting. I did it because honestly, it was easy. I did enjoy it. It was just kind of, while there was math to it, it was just like, here are the rules, follow the rules. And I was like, I can do that. Just rinse and repeat. One of the things that had happened is I left college. I went to work for the bank, one of the large banks in Charlotte, and really kind of on a path of like, oh, this is how I build my corporate career, and found out over the first 3 to 4 years, I'd say that I wasn't cut out for the corporate world, but maybe the corporate world wasn't cut out for me. I liked a fast pace. I liked making decisions. I liked being able to break down a problem and execute on a strategy. I loved all those pieces. And in a large corporation, it's not as agile or versatile for that. So I left there. I ended up at a young age getting a job as a CFO for a construction, real estate development, and engineering company. Thought I had arrived. First couple weeks, realized that company was about to go under. That's probably why they offered me the job. And biggest learning lesson was like, I got to figure out how to make this company last just long enough for me to find a new job. And when I started working through all of that, I started working with their board of directors, their managers, and figured out how they could not lose money. And then we literally grew it to about a $25 million a year company. And that was what I enjoyed doing. I did leave there. The last thing I would have ever told you, Danny, that I would ever want to do was be an entrepreneur. As an accountant, I would be like, too much risk, too much work, don't do it, I'm out. But I just, when I left there, their engineers said, start up an engineering company. We don't know how to run a business, you do, but we know how to be engineers. I didn't know how to be an engineer. So we started up IDE Structural Engineers. And it was funny, I don't mean to go on too long, but from there, I was like, okay, let's build the company. And they wanted to build a company, but they didn't want to commit to hiring people, training people, managing people, doing marketing and sales. And I was like, well, you can't scale a company that way. And I realized you don't need a CFO full-time, but I have the skill set. And really, Danny, I've just been spending my time using my background in finance and operations to help other businesses make sense of all of it. There were a lot of twists and turns along the way. A medical device company ran out and, raised a couple million for, ended up going out, starting a donut company, which spawned the book, And even from there, kind of with a core mission just to try to help as many people as you can with the skills I have, teaching fell into that, teaching accounting and entrepreneurship. So the mission probably for me, or the value's always been the same, but I've just applied it from whether it's entrepreneurship to consulting to teaching to business ownership, just kind of living the value.
Love it. It's funny you mentioned, you never would have necessarily saw yourself going out in the world of entrepreneurship. I feel like a lot of the folks that I talk to on this podcast and other places too, like a lot of the entrepreneurs, like their parents were entrepreneurs. And so it's like, it's this whole like family thing. But I'm one of those people too who's like a first generation entrepreneur. Like my parents weren't entrepreneurs, and I feel like it's different, right? Because like if you've seen people do it, I don't know, it's just in some ways it's easier, or at least it feels more comfortable. But when you go take that plunge for the first time, that's pretty big deal. So cool that was your experience too. So all right, so you mentioned multiple times sort of serving as a CFO, and I understand that that's kind of one of the core services that Nexagy provides is fractional CFO services. But let's actually start here, because obviously everybody in the business world like has heard of a CFO and like knows that it stands for Chief Financial Officer, but I think there's a lot of I don't know, uncertainty, ambiguity about like what a CFO actually does. So could you kind of shed some light on that? Like what, at its simplest, like what even is the role of a CFO, and like how do they spend their time?
No, and it's a very common question, and kind of tackling all this from all areas. We have a lot of C-suite people, whether they're fractional or full-time. And we have a lot of people that have seniority. So, getting on that C-suite is kind of the top of the food chain. Well, what people think is like, I'm the most senior person here in ops, or I'm the most senior here in accounting and finance. Like I'm now the CFO, the COO. And really that's without defining the role. When it comes to accounting, I can kind of break it down this way. A CFO is somebody, regardless of their background in the C-suite, they're there to help direct and define the strategy of where the company wants to go, with the sole purpose to provide shareholder value. Sometimes the owner is the CEO, but it is to help define that strategy and execute it. And it's very broad based. Now, when you say CFO, that means their background's finance and accounting, so they can help apply those concepts to it. Operation, technology, etc. However, there is no silo in that area. When it comes to building a strategy, it's all hands on deck. So a lot of people are like, oh, we want to know what your cost per customer acquisition is. They're like, well, that's dollars and cents. That should be accounting and finance. No, that's actually marketing. But I have all the dollars spent on how to work with that CMO to figure those pieces out. So when you talk about C-suite, it's all strategic and execution along the way. And the fractional piece is if they don't need it all along they don't need a full-time person. They get expensive. But I always tell people when they are hiring us, you're buying a seat at the leadership table for someone to work with you through these pieces that has expertise perhaps you don't have.
Yeah, that makes a lot of sense. I've heard you say that before, just the idea that like ultimately the CFO should really be a seat at the leadership table, and not just kind of like a glorified bookkeeper, right? So that's really helpful.
I don't want to say that like glorify. Like I've met accountants who are better accountants than I'll ever be that are controllers. And they're great, but they're really good at reporting information, compiling information, honestly supporting so decisions can be made. But when it comes to like the strategy piece and how do you execute this throughout a company, and accountants are notorious. They like to, a lot of them are not very social. They like to just be behind their computer screen or work on their own. Leadership, especially at a C-suite, is all about collaboration. It's all about exploring. It's about taking risks. It's about being comfortable not having all the answers.
Yeah, I love that. So, okay, there's actually a question I had for you already, and since you brought it up, we'll jump over there because I think I think this is probably helpful for a lot of business owners who don't know this stuff. So you mentioned controller. People talk about bookkeepers, controllers, accountants, CFO. Like, can you just give us kind of like the basic primer of the difference? Like, how's a controller different than a bookkeeper, and how's that person different than a CFO?
Yeah. So real quick, let's talk about bookkeeping for a second. A lot of people struggle with their bookkeeper, right? Bookkeeping at the end of the day is the person that's going to gather the data and enter it into an accounting system, okay? And here's a big problem that's happening in small businesses. You find people that know QuickBooks and call themselves bookkeepers, but all they truly know is how to use software. They don't understand the fundamental concepts behind accounting. And I hate to bore you, but with the difference between the debits and credits, how it feeds to the balance sheet, how it feeds to the profit and loss, they just get information in the system. That's it at the end of the day. And honestly, they shouldn't be responsible for what the structure is, what the chart of accounts looks like, what a P&L looks like. They should just be feeding information so those reports are defined. Now, the controller is there to support leadership. The controller is there to make sure as we compile all that information, it's going to spit out reporting. It's going to be able to measure and create scorecards that we can make decisions from. What decisions are those that need to be made? Well, those are going to be made by the C-suite, by the ownership. But the controller is the one that actually puts that whole structure and directs the bookkeeper on how to make sure that those rules and standards are adhered to. Then when it comes to execution and strategy, that's where the CFO is. And I always say a CFO needs a good controller to do their job. Good controller needs a good bookkeeper. And there are a lot of instances where the CFO, controller, and bookkeeper are all the same person. But more times than not, it's not the case. You have people that are really good. If you have somebody that's got a very strategic mind, you don't want to be paying them a high dollar to, enter in bills and things like that.
Yeah, that makes so much sense. So, okay, because we have, a number of maybe early stage founders that I know listen to this show. So, we rattle off a few different sort of job functions. We talked about a bookkeeper, we talked about a controller, we talked about a CFO. Like, is there sort of a guideline you can share for, like, maybe it's a revenue number, or maybe it's like, I don't know, size of clients or number of transactions or whatever, where, once you reach this size, you should go hire a bookkeeper. Once you reach this size, you probably need a controller. And once you need this size, you probably need a fractional CFO. Like, do you have any sort of like guidance around that?
I'll be honest, when it comes to bookkeeping, I mean, number one, when I say bookkeeping, I'm talking about getting a good bookkeeper. A lot of people love to find the $500 to $700 a month bookkeeper. And let me be clear, there are some that charge that are excellent. For every one of those that are excellent, there are 20 bad ones that are just there. They know how to use QuickBooks. And I'm not knocking that, but understanding how to actually, adhere to a structure. I would say if your business, honestly, if it's doing over 50 to 100,000, get a bookkeeper. You're probably a founder-led company. That means you're doing the sales, you're doing the execution, at the end of the day, if you're going to build your company, you need to get rid of all the things that aren't adding value. You need to be out there selling, doing the work, get the support staff you need. Now, don't just throw money at a bookkeeper and say, I'm going to pay $1,000 for a bookkeeper or $2,000 and just do that. You need to know that your time, that what you're actually going to go do outside that is going to make more than that. And I would assume if you're good at what you do, and you can start, even if you're bad at sales, but you're good at what you do, getting out there, you will, the time you save not working on invoicing and bills and all that, you should make tenfold out in the field.
Yeah, that's great. That brings me back to the early days of building. I think it was my very first business, which was a marketing agency, which, is one of the companies I still own today. Very early on, I literally did our books using QuickBooks. And this is like before there was even QuickBooks Online. And so I would spend a couple hours every single month just, reconciling transactions. And, I think it was either the book E-Myth or it was a mentor that my business partner and I found that pretty early on was like, dude, you got to stop doing your own books. Like that is such a waste of your time. And you're probably not all that good at it, which he was right about that too. And so I have good memories of sort of relinquishing that for the first time. And yeah, it meant writing somebody a check. But to your point, I got a whole afternoon back every month. And there's just some like really good energy that comes from delegating something. And we like to say delegate and elevate. Yeah. So I couldn't agree more with that advice. I really do. I do think that just about any business, any size, like, as soon as you have more than a couple clients or you sold more than a couple widgets, it's probably a really good idea to hire someone else to do your bookkeeping, so that you can elevate yourself. But what about like a controller? Is there a point when like it's time to upgrade, or does that just kind of depend on the business? Like, when do you need to bring a controller onto your team?
So now you've got your bookkeeper, you've got somebody in there that can get the information in there, but now it's time for reporting. You do want to spend time in your P&L. You want to spend time on your sales per customer. Maybe you want to look at your gross margin. Like, you need a structure so you can make decision. Is my company making money is the first question. But am I making money per projects? Do I have enough projects? Do I have enough clients? Do I have enough, how many widgets am I selling? Like, that's where you need to start getting reporting. And you need to know what you want to ask to get that controller to build the reporting and the foundation so you can get that information. So when you're looking for, you need reporting for decision making, not counting on the controller to solely make the decisions. Good controllers can give you recommendations or tell you what is behind the numbers that are giving you the information. But for the most part, it's to help the senior leadership in any company or any team to make better decisions going forward.
Yeah, okay, that makes so much sense. And then at what point, obviously at Nexagy, I understand, you guys sort of provide, if I understood correctly, you provide both fractional CFO services and controller services. So like at what point does it make sense for a business to actually bring on a fractional CFO?
Yeah, at that point, it's all a question. It's the two extremes. We need to grow. We want to grow to the next level. We want to grow top line revenue. Maybe we want to do that slower, but increase our net profit, net income. Trying to find out what the goals are. Do we want to grow market share? Like, what is our long-term goals? Like building out that strategy, the scaling part, which is exciting, but also the back-breaking work. Or we're hurting really bad. We're trying to undo years of bad practices, or we're trying to make sense of what we have. Things feel rough right now. It's funny. Nobody calls the CFO when things are just day-to-day business. When it's either shooting like a rocket, or when it feels like it's going down the drain. That's when the CFO usually gets called in.
Oh man, you could probably write a whole nother book or something just about the situations you've walked into. Because in all honesty, like marketing is kind of a similar conversation, and so often people come looking for marketing help about a year after they already should have because like market share is shrinking or whatever, and so definitely identify with that. But okay, so I want to transition a little bit, and I do want to talk about marketing numbers, because that I think is a really fun, like a lot of marketing people, especially early on, like don't really like to think about numbers, and it's supposed to be creative and it's artistic, but it's like, no, at the end of the day, like marketing is very much a business function, and it's an investment, and therefore you need to see a return on that investment. So I love having the marketing numbers conversation, and I want to set it up this way. One of the things I've observed is that when you get marketers talking about data and numbers, there's just so many different data points they get excited about, right? Everything from like impressions to engagement time to attribution, sort like all sorts of, marketers can drown themselves in data if they want to.
Yeah.
But from a C-suite, like business level, maybe CFO level, like seat, a lot of that stuff is just noise. And really your average business owner doesn't need to hear about the number of impressions or the engagement time or all of these metrics that might be important at the micro level but aren't important at all at the macro level. So can you share, just sort of from a, again, from a C-suite level, from a CFO level, like what are the numbers that you look at when you're determining, marketing success in an organization that you're working with?
Yeah, and again, accounting and sales are, they're diametrically opposed, just the personality types and everything, especially when it comes to marketing. So it's a lot of, it's funny, a lot of accountants, when they're trying to figure things out, they just want to start cutting expenses, and let's cut it marketing. Like, what do we have to show for it? Because if you look at the P&L, connecting what marketing is done straight to sales it's not going to ever be self-evident. It's going to be external reporting to get there. At the end of the day, it's always, and I'm sure you know this, Danny, it's always backward engineering. Like, how did we get a customer in the front door? Well, what did they do? That was an introduction. Okay, well, Danny introduced me to Joe Schmo, and then I went and had coffee, and he said that. Well, how did I meet Danny? Well, Danny maybe saw a bunch of my posts on LinkedIn and interacted with me, and we've decided we had to get coffee. And, well, how did he get to LinkedIn? Well, he did it because he somehow got on our newsletter. Like, at the end of the day, you're trying to trace how the ideal customer you want turns into a revenue opportunity. But as you know, Danny, there's a whole lot of steps in between that. McDonald's, it's easy. You're driving, you're hungry, you see the sign, you pull in, you eat. With services, you feel the pain, but you don't understand it. You got to talk to 3 or 4 people just to understand what the service is. Then you get a couple recommendations. Then you do your research. Then you meet the firm. And you may still not make a decision for 3 to 6, 12 months later. Some of my clients that I've had, I gave them their first proposal 12 months before they ever signed. And, they met with me months before. So trying to figure out, what that life cycle is to get that return is a big piece of it. Now, what the cost and return on that is a whole other thing. Because I teach, because I do stuff, I've turned a lot of my classroom material into a web series. I just give it away, and so you'll see influencing entrepreneurs. You see a lot of conversations, very similar to ours, Danny, of what's happening, struggles of the entrepreneur, what's happening with their numbers, what's happening with them marketing-wise, just sharing those stories. And we do put those out there so if somebody sees it, not to say, hey, buy, but we do like people out there to say, hey, these are the kind of the conversations I want to have within my company. And if you see this, well, hey, we're available to have some of those conversations. And those conversations aren't always sales calls. Sometimes it's just to touch base. Sometimes we give solutions away at the first meeting and they go and they're successful from there. More power to them. When we actually have to do the work is when we get engaged. And I'd love to tell you we're all, especially being accountants, that we're all numbers driven. We got to drive revenue amounts. I mean, we have KPIs we track. But our first KPI is literally how many positive impacts can we have with other business owners. We don't always have to be the solution, but providing them, a pathway to good solutions, because we don't have marketing solutions. We don't have operations solutions, but providing them a pathway to that when they do need accounting services, hopefully they'll think of us first.
Yeah, no, that's awesome, Cass. And one of the things I love that you shared is, there are just it can be hard to put your finger on exactly who gets the credit, what gets the credit when you bring in a new client, right? You mentioned, well, it could have been because they saw my book. It could have been because they sat down for coffee. It could have been because they went and downloaded my video course and then they were getting emails for 3 months and then but the way I try to break that down and simplify it for business owners, I'm curious if you see it any differently, is you really have to look at your marketing almost like an investment portfolio.
Yeah.
Where it's you've got different components that actually have different measurements and KPIs. And just to make it simple, one of the things that I think that most business owners overlook is the importance of just nurturing relationships, nurturing clients, nurturing leads. And you do that with marketing email newsletters, email marketing, digital retargeting, right? And that fits in one specific piece of your marketing system. But then there's other marketing, right? There's the marketing you're using to go generate new leads, new phone calls. And so that's things like Google ads and Facebook ads or direct mail or TV and radio. And it's all of that stuff, very different, right? It's investment portfolio or a football team, right? Where being a great offensive lineman is very different than being a great quarterback. But really understanding that marketing, it can't be overly simplified to where you only look for sort of one outcome. That said, I am a believer that there are some bottom line metrics that you can look at. You should be able to look at a number like cost of acquisition, right? If we spend, $100,000 a year on marketing, how much revenue are we generating off of that? And, and it's different in every industry. I'm not saying there needs to be a hard and fast rule, but I do think there are some high level metrics like cost of acquisition, cost per qualified lead, things like that really do make sense to look at the leadership team at the C-suite level. Do you agree, or would you add anything else to that list?
Well, number one, I completely agree. And it is one of those things I always thought digital advertising, I got to have people clicking on Instagram and I got to have a lot of followers on LinkedIn. I got to reach them. You got to have it, but it's not the end all be all. In fact, I've met a lot of people that have tens of thousands, hundreds of thousands, even 1 million followers. and they still don't know how to monetize it. They have an audience and platform, but you look at like, oh, I've got 900 followers, but I know how to turn 2 of them into 100 grand for over a year. So like trying to figure out where the conversion is, that money, isn't coming through Instagrams and all those, like, if you're, and let me say this, for a service-based company, if you're e-commerce, rules do change. If you're B2C, completely different. But I'll be honest, I even looked at this, Danny, you kind of set me on the path. This month, we did our first ever like lunch and learn half-day seminar event. Even you were like, charge people to be there. The ticket price doesn't matter. You need people committed. We spent $2,000 to throw an event that brought in $500 in ticket sales, right? Any accountant would be like, well, there's something that lost you money. Well, within 1 week, we turned one of the attendees into a $60,000 a year opportunity. And what I will also say is our average lifetime client is at 25 months. So that really is worth $120,000 plus for that one thing. So to say I lost $500 or $1,500 on an event is very short-sighted. It did grow that opportunity for us to go out and get that client. And that was just in the first week. Hopefully we hear from more of those. If this happens, I'll lose $1,500 every week to drive that kind of, return on my investment.
Yeah, sign me up for that. That sounds great. No, but I love it, and that's awesome to hear. I'm glad that event went well for you guys. All right, so Cass, this has been super useful. I think you shared a framework of sort of how to build your financial team. Bookkeeper, controller, fractional CFO. That is super helpful, and I think super useful for our audience as they're scaling their business. So for folks that are listening to this, want to learn more, want to connect with you, what's the best way for people to do that?
Listen, of course, if you look up Cassmer Ward, there's only one of me. It's the only spelling of it. You'll find me that way. Nexagy.com is our firm. And honestly, check out Nexagy Education on YouTube. That's where you'll find, honestly, everything we talk to our clients about, everything I teach. It's all up there, free on YouTube. So make sure you can check out Influencing Entrepreneurs there as well.
Yeah, awesome. We will make sure to link to all of that in the show notes. And guys, I'd also encourage you, go check out Cass's book on Amazon, which is called How Much Does It Cost to Make a Donut? I think that's a sort of fantastic foundational book for every business owner, frankly, to read. So Cass, before I let you go, I've got sort of one final question that I ask for everybody. And that question is this: what is the one thing related to financial management that you really wish every entrepreneur understood? If you could just push a button and like transmit this one truth to every entrepreneur kind of related to financial management, like what would that idea be?
Profitability does not always mean you have positive cash flow. That is the biggest, everything says I'm profitable, but why is there no money in the bank? And connecting those dots along the way. There's a lot that goes behind that. That's honestly why accounting professionals get pulled in. But there are people that call me in because they don't have any cash and they're like, my business is failing. And they actually have one of the healthier businesses. They've just got bad practices on how to drive cash into the business. So I would say that is a big, big starting point for a lot of business owners.
That's really smart. And I imagine the opposite is true too, right? Where it's like, just because I have cash flow right now doesn't necessarily mean my business is profitable and healthy long term. Is that fair?
Yeah, that's exactly. Yeah. Sometimes cash hides a lot of the problems that are about to hit.
Fantastic. All right, Cass, thank you so much for being here. Really enjoyed it, and look forward to connecting with you soon.
All right. Thanks, Danny. I really appreciate you inviting me to be on.
Thanks for listening to the MyMarketer Show. Hope this episode was helpful. Stay tuned for more great content in the future. Please be sure to like and subscribe. And as always, if you would like to add a world-class virtual marketing assistant to your team, you can get started at MyMarketer.com. Mention the MyMarketer Show and we will waive the startup fee. Thanks for listening, and we will see you next time.